we get started, I want to thank the Cherokee Pins Project Foundation and Star University for supporting tonight's webinar. And it appears that we are all up. We do have a chat screen, so please feel free to report any issues with audio or video during the presentation. So again, my name is Brandon Caruso, and I'm a loan officer with Today Lending. And we are very, very excited to have you join us this evening for a Star University and Cherokee Pins project presentation. And this tonight's presentation is going to revolve around the Section 184 loan. So this is a home mortgage program that I personally hold near and dear. I've been doing the particular program for a number of years now. Helped family, friends, including myself and my current home with my wife through this particular program. So we're very familiar with it with our company Today Lending. We do it every day. And when you run the numbers, it turns up to be, I believe, about 77% of the loans that we do write. So over the few hundred a year, those are going to be helping out Native American families, and a large portion of those are going to be first-time home buyers. So again, something that I hold near and dear, and I am honored to be asked to present a little bit about this program. I've had similar presentations with tribes and tribal citizens directly, but this is going to be my first one online, and so we appreciate your patience for the delay and
can't play now, puppy.
Glitches. Hopefully minimal. All right, well, let's get started. So I'm going to run you just a brief overview of this Section 184 program. So it is a HUD program. HUD stands for Housing of Urban Development. So much like the FHA loan or other government loans like USDA and the popular veterans loan, it's going to kind of fall into that. So the program came around in 1992, and largely to address a couple big concerns that were happening with housing in Native country. The first one being just how difficult it was for a bank or a lending institution to lend on tribally trust land. So you have a lot of Native Americans that are living on tribal trust land where it is a lease, and so how can a bank loan on land that they will never own? So there's a huge risk there. So there's your first challenge that was addressed. And then the second one was just the statistic of Native Americans that were lifelong renters. So it was an extremely low statistic. And we can move to the next slide and I'll show you for that. Excellent. All right. So statistically, if you are Native American, you are less likely to own your own home. And there's a number of reasons that I would argue that you can point to for that. So you have a abnormally high dropout rate, a low rate of higher education, bachelor's, master's, and of course poverty. So those are a few key reasons why Native Americans could be less likely to own their own home. And so with that, you have the challenge, the problem that was addressed in the 90s and is continued being addressed, and it's something that every year will be assessed. But at the end of the day, your tribe's going to be your best resource. So you have the Section 184 and your tribe, whether it be Cherokee Nation, Muskogee Creek Nation, any federally recognized tribe. And with those two working together, we often find is the best match to get folks into homes. And it's not only a resource for educational purpose, but is a resource for monetary purposes as well. So it's not uncommon that your tribe does allow for tribal grants or assistance or small loans to help folks with down payment purposes. Oh, I have a note here. Make sure to have your phones and your mics on mute. And so it's the Section 184 is working with tribal members to get into a home. And so what are the advantages? That's going to be one of the big questions that I get a lot, especially from folks that are in more median to income areas. So why am I using this unknown program when I can go down the street to my local credit union and get a decent interest rate? Well, some of the advantages with HUD 184 is going to be your low interest rates, which translate into low monthly payment. There is no minimum credit score, which we'll go into later, but that is a huge advantage for folks that are building their credit or young professionals that maybe just got out of school. There's also a manual underwriting process, which is held a little bit differently than really any other program through the vehicle of government loans, as well as being able to live on and off tribal land. Most of the HUD 184s, even though, as mentioned earlier, the intention was partially to be able to get loans on tribal land, the reality is most Native Americans that utilize this program are off tribal land. So for my at-large Cherokees in California and Oregon and Washington, you can utilize this program without being inside of the jurisdiction. So it is a common belief that if you use tribal assistance in any way or form, you have to be low income, you have to be living on tribal land, etc. That's not the case. Now, seeking assistance from your tribe directly, usually, that's where you're going to run into those guidelines and those challenges. However, you can make $1 million a year and still use this program. And the reason is because you are a citizen of a federally recognized tribe. And, by utilizing that card, that tribal ID card, you are free to apply to this program. It's a very special thing to offer. It's not something that, anybody outside of that could or even really have the opportunity to. So keep that in mind as we move forward here. Can we go to the next slide, please? I believe one back there. Okay, yep, that was it. All right. Yep, next slide. Okay, all right. So I went over a little bit of the big reasons why this particular loan, and I put on a couple bullet points as to the progression of this, because here's another pretty common belief that I run into is I heard about this loan. This would be a phone call, but the loan may not be around in the next few weeks or months. What happens if this loan goes away? So the reality is this loan is over 25 years old. It's been around for a long time. It continues to grow. The budget on this program continues to grow each year, as does the loan limits. So I don't see this loan going away, for a very long time, just because of the market. It's if anything, the popularity is growing, and I think we're going to see more lenders and more banks open up to this program, as well as areas to do so, which we haven't touched on, but I will here in a few moments. So 19% a year is typically what it's been growing. It's had over $4 billion in loans. That's $4 billion in Native Americans that are getting into homes. Now, the average home in Oklahoma is going to be 120 to 200,000. Now, that's not the case, obviously, in Colorado and California, but that gives you an idea of how many loans are getting pushed through this program and helping families. 100% of the loan amount is guaranteed by HUD. What does that mean? It doesn't mean that you are 100% guaranteed this loan, because obviously everybody has to go through an application process. But what it does mean is if there was ever a foreclosure, This loan is guaranteed by HUD, meaning that the bank or loan servicer will get those funds back, which means it's a less risk for the borrower. Okay, educate and invest. And next slide, please. Okay, so today, and I want to acknowledge the folks that are tuning in. You're here to do just that. And so there are a number of resources, home buyer seminars, tribal housing authority, credit consultation services. Now, the first 3 bullet points here, most of those are, what I should say is most tribes are going to offer these services for free. So going back to that previous slide, your tribe is going to be one of your best resources. It's going to offer most of the time free education and the ability to help especially first-time home buyers and typically folks that are inside jurisdiction for grants. And then, of course, my favorite internet resources, podcasts, those are really big for me with just seeing what is the latest and greatest on the mortgage industry, but also meet with your real life experts in the field, your loan officers like myself, or your realtors, folks that know the area, know the market, what's happening, in your backyard for purchasing homes. I want to bring us to a quote by our late Chief Wilma Mankiller. I don't think anybody anywhere can talk about the future of their people or of an organization without talking about education. So as an umbrella here and as a take-home, education is truly the way to push this program forward because we have a lot of realtors and a lot of loan officers that just hasn't heard of this program. And so what's more scary than the unknown to a realtor that is wanting to get somebody in a home? That's their job. Of course, they want to get a paycheck at the end of the day too, but so often the most direct and straightforward path is going to be your conventional and FHA loans. Now, how often will a realtor ask their clients, are you Native American or a veteran? I'm going to say it's probably 1% of the realtors, but the 1% that do are going to be the smartest and I think the most forward thinking. And the reason is because there are other programs that behoove Native Americans to utilize. So if you are, for example, if you are pre-approved for an FHA loan, please look into HUD 184 because you are throwing money away by going outside of it without at least looking at the terms first. Okay, and ultimately it's an investment. Which in the native country is huge. I mean, we see tribes invest every day. We see casinos. We see them invest in themselves. So as a Native American person, as a citizen, how can you invest in yourself and ultimately your family? A lot of people don't realize if you're living in a home, even if it's an apartment, you're often paying for the equivalent of a mortgage. And sometimes it truly is just that. You're actually paying for somebody else's mortgage. So why, pay somebody else's mortgage and potentially rent, which I have had clients living in the same home, renting for 20, 30 years. And at that point, they could have owned or bought this home and had it outright by then. So there's that initial investment, stop paying other people's mortgage, invest in yourself, but there's a number of things and advantages that come with that. So predictability, you know what you're going to pay today, and you also know what you're going to pay next year and the following years after that, as long as taxes and insurance stay roughly the same. Whereas rent, next year in 12 months, you usually don't know exactly what's going to happen. That's a pretty common unpredictability with the rent environment. You also build something called equity. Equity can be a little bit tricky of a term, but to sum it up, and the easiest way I can explain it is the percentage or the amount of something that you own. So Classic example is everybody owns a car, right? And if the car is worth $5,000, but you still owe $2,000 on it, well, now you have $3,000 of equity. And it's the exact same situation with the home. So you're building equity as you progress through the mortgage. You're also able to do things like pass along property. You are able to work your savings. There's some tax breaks and benefits as a homeowner. You also build appreciation. So for my friends in Los Angeles or the Bay Area or Denver, you find that today the price of your home is probably not going to be the price of your home in a year or 2 or 5 years. With the market growing as fast as it is, you're growing equity and appreciation in your home, where if you were a renter, you just simply wouldn't have that advantage. The freedom and stability also plays a factor as well. So freedom, mostly I would say freedom in being able to paint or remodel your home, in having full advantages of that. And of course the stability, again, going back to predictability, I think that you're generally in a more stable financial position because of the predictability. And I did receive a note. It looks like, can we post a Star University login? It looked like somebody was having some trouble logging in, maybe in the chat section. Okay. Okay. Yeah. Okay. All right. And we'll move on. So what type of home can I buy? I added this slide a little bit later just because I was getting asked this question so often. Nowadays, especially with the new trend of tiny homes, more cost-efficient lifestyle, what you're going to find is smaller, more energy-efficient homes. And the answer is, what type of home can I buy? Really, any type of home, as long as it is on a foundation, it's attached to the land, and basically you're good to go there. So brick and mortar, modular homes, manufactured homes, mobile homes, new construction, and then of course you have your kit homes, your tiny homes. So here's the big challenge with those tiny homes, and let's just say cost efficient or energy efficient homes. It's got to appraise. So you have to be able to send an appraiser out to the property, and there has to be similar and equal value homes in the area that have sold, and that's going to create the value of the home. So I say really any type of home, as long as it's permanently fixed, as long as it appraises. And so I would take it as that. And if you have any questions, especially with homes you're interested, please talk to your loan officer and they can walk you through that. Okay, compared to other programs, going back to the big question of why the Section 184, I can go down the street to talk to my loan officer at my credit union, and he's got a number of programs for me. So here's a side-by-side comparison. Conventional, typically they want 20% down. Now you can get as low as 3% down, but you're going to be paying for it in a big way. And it comes down to your mortgage insurance, or PMI, which you'll see there. Speaking of PMI, Section 184 is going to have the lowest PMI out there, with the exception of the VA loan, which just doesn't have PMI. Now, I didn't put the VA loan on here, but what I do find, and not a big surprise, is a lot of our Native Americans are veterans. And so if you are a veteran, I do hope that you look into the VA loan as well. It's a wonderful program. I would say it's just as competitive as the Section 184, 0% down. However, you have to be very particular as to which branch you're in the military, and how long you've been in the military, and what percent of disability. So with those variables, sometimes it's actually not as competitive as you would hope. So Section 184 tends to be the most competitive, and it will 9 times out of 10 beat the FHA loan and your classic conventional loan. And it's partly because of the PMI. It's partly because of the flexibility to get in the program. And of course, the down payment is very low as well. Okay, so let's run through home ownership, and then we'll open up for some questions here. So I'm going to run through these pretty quick and just give you an idea of what to expect when going through the Section 184 program. So the first thing you're going to do is fill out a free application. Honestly, should take 20 minutes. Mine takes probably 5 minutes. You're going to just do a few very basic bullet points: name, social, income, property address, the value of the property, and the amount that you're looking to borrow. Those 6 items are really all you need to get started, give the loan officer an idea of where we're sitting overall as far as eligibility, and also as far as affordability. So those are going to be your 2 big questions. What can I afford, and am I eligible? Okay, what's your credit score? So as I mentioned earlier, the Section 184, actually, it does not have a credit score requirement. So this means somebody with no credit or low credit, you can theoretically get into the Section 184 program. And the reason is it's a credit history-based program. The difference is they are going to look at your credit history as opposed to a credit score. So if we're looking at FHA, typically 580, 600 is the absolute bottom where you can qualify. Conventional is going to be 620 and up. And at 620, you're really going to be paying some expensive mortgage insurance. The idea there is the higher the credit score, the less risk a borrower has, and so the cheaper the payment, so the lower the interest rate. Now with 184, it's a little bit different of a beast, and so you are able to look at credit history and also alternative credit, which is something that lenders usually don't talk a whole lot about. And the idea with alternative credit is you take a trade line, an account. This could be a gym membership. It could be your utilities. It could be rent history, Amazon membership. Basically, the idea is an account that you have in your name that you've been paying on time for 12 months. And that's what's called an alternative trade line or alternative credit. So even without a credit score, HUD 184 can build your credit, and we can get you qualified and into a home. And that's one of the things that makes HUD 184 such a strong and helpful program when compared to those other loans. Okay, so what's my income? You would think this one is straightforward. However, we often work with folks that are self-employed or that rely on commission and tips. So the idea there is, obviously, if you're a W-2 employee, your pay stubs are sufficient, easy, it's on paper. Or of course, if you're Social Security income, disability income, those types of stable income are very easy to document. It's never a problem. What's a little more challenging is commission, tips, tax return, or excuse me, commission, tips, bonuses, and self-employment. So what they're going to look for is an average of 2 years, and they want to see typically 24 months of taxable incomes. And they're just going to take some averages as to what you're actually netting before write-offs. That tends to be your general rule with self-employment income. Okay, so then you send all your paperwork to the lender. This is the big part, because often we can get folks pre-approved without this documentation, just going through what you're telling us. However, this is really going to help with knowing where we are overall. So identification is the big one. Obviously, if you're applying for the HUD 184, you got to have the tribal enrollment card. That is not the CDIB card. That's a enrollment card with an enrollment number. So the equivalent of a Social Security number, but for tribal enrolled citizens. Send your tax returns, your W-2s, pay stubs, and bank statements. That gives us an idea of where we're sitting as far as affordability and also as far as eligibility. So are we seeing a mismanagement of funds? Are we seeing derogatory credit? You know, and those things we take on, you know, one at a time, case by case. In worst case, you know, I hardly ever give out denials. And the reason is because it's always a working application. So if somebody has a recent collection or lien or late payment, often it's just a work in progress. Let's see what we can do with moving forward and in making a plan and following the plan so we could get somebody into a home. Sometimes it takes 6 months, sometimes it takes a year. I just closed a loan last month, and we've been working with them for a year and a half. So it takes time, and please don't be discouraged if the path to getting into a home takes a little bit of time. And honestly, it's actually very normal. Okay, so once you're pre-approved, you get a formal letter, and the letter is going to come from the lender. And you use that pre-approval to start to place offers. Now, one thing I want to note here is, let's say you get pre-approved for $500,000 and you find a home that's only $300,000. Well, it's probably not a good idea to show the seller that you're actually approved for $500,000 because they're not going to be willing to negotiate with you. So what you want to do is reach back out to the lender, let them know, I found a home, give them the address, let them do a little research, and get a new pre-approval every single time you place an offer, and match that pre-approval letter with your offer. There's no reason to show the seller all your cards. You want to stay in a strong negotiation position. So make sure you're corresponding with both your realtor and your lender when you plan on making offers. Okay, so once you find your home, then my job really starts, and we really get to work with ordering an appraisal. Now you're going to be submitting your earnest money and ordering inspections. We're going to be working with your underwriter to get you into this home as fast as possible. There's going to be a processing portion of this. There'll be a conditions, and then of course the appraisal. So it's a process. Ultimately, I've seen it done as short as 3 weeks. But I would say on average, especially in the summer when it's the busy season, you're looking at 4 to 5 weeks on a turnaround. So it's usually about 4 weeks to get that loan approved, and then an extra week to get the closing package set and get you to the table so you can get those keys and start moving all your stuff. So once your big move-in day comes, you're going to pick up your keys at the title company and make sure you get plenty of friends and family to help you move all your stuff. Okay, so we're going to wrap it up with a few slides here, and then we're going to take some questions. I wanted to point out or present this slide here in Iroquois society. As a native citizen, you often hear about 7 generations. So leaders are encouraged to remember 7 generations in the past and consider 7 generations in the future when making decisions that affect their people. The reason why I bring this slide up is because I think it absolutely pertains to what we're doing here with getting Native Americans in homes. So as a first-time home buyer, where did you learn exactly how to become a first-time home buyer? Was it through your tribe? Was it through your family? And we found through statistically, if you come from a family of renters, when you move away, you're probably going to rent because no one's taught you any differently. So by making this transition, this investment, you are making that pivot and that move into the next 7 generations, and it's something that I think is a wonderful investment, and it's something that I get excited to see when we have Native Americans that are first-time home buyers. Again, that's going to be the bulk of HUD 184. Now, obviously, you don't have to be a first-time home buyer, so I don't want to persuade people away from it if they're not. But most of folks are getting into investing in themselves and their family, and I know and I see upon experience that information, that knowledge and experience does get passed forward to their kids, and I expect grandkids as well. So by using this program, I think is one perfect example of looking at our 7 generations rule. And again, it's something that I look forward to seeing every day when I come into work. Okay, I believe there should be one more slide, but possibly not. That might be the last one. Is it the last one? Okay.
One more.
Okay. All right. So at this point, we're going to open up to any questions. And I'd like to leave plenty of room here because usually, in my experience, it starts with one and it really snowballs from there. I will be, um, well, what I want to say is, I don't want to dive into anybody's personal finances necessarily. However, whatever anybody's comfortable with asking, I'm more than happy to address. And if not, I can throw out a few questions that folks will normally ask on the HUD 184 program. So I'm going to open the floor just for a few moments, see if anybody would like to ask. Okay, well, let me put out just a few questions that I normally receive. One has to do with where can you utilize this program? Most states on the, let's say, Oklahoma West are going to be the whole state, and there are some states that only utilize it in a few counties. So Texas is a perfect example. Texas, Hudspeth, and El Paso counties are two counties in the entire state, whereas if you were to look at California, Oregon, Washington, Colorado, Oklahoma, Kansas, and Florida, they're all going to be, the entire state is eligible. Now, how much can I borrow? That's a big question that I usually get. Every county is going to have a maximum loan limit. Now, sometimes all the counties in the whole state are the same. For example, Oklahoma is like that, and I believe Kansas is too. So you're usually looking at somewhere in the $250,000 range. In Los Angeles, you're going to have high cost counties and areas. So what you want to do is ask your loan officer or reach out to HUD. And actually, the best way to do that is just go to HUD.gov, and you could look up a list of counties per state as to the max amount that you can take a loan out for. So if you're in Los Angeles or Ventura County, you're looking at I want to say $80,000, somewhere in there, $450,000. Whereas if you go to the next county, let's say Riverside, it does drop down to somewhere like 380,000. So anyway, the take home there is HUD.gov will have a lot of this information, or the good old fashioned way, just give me a call and I can help you walk through that as well. So my direct number, the number that goes right to my desk, 918-388-9713. You can always call me and ask any personal questions, whether it has to do with HUD 184, your eligibility, your affordability, or any general questions as to the process. And you'll find even the most educated people, your lawyers, your teachers, your CPAs, the mortgage world is a largely unknown field. So what I find is even some of these people that you would think would be very qualified applicants and know finances moving forward, there's some pretty small details that are actually very important that you can miss. Like, for example, one that comes to mind is planning ahead 2 months in advance, which is another question that I get. And I actually got it recently. How long should I plan forward? Well, you usually want to start talking to loan officers and even maybe real estate agents 2 months in advance. Can it happen sooner? Absolutely. However, there's going to be a larger margin of error. So, for example, if you had some overdrafts on a bank statement last month, well, I probably wouldn't advise moving forward for another 30, 60 days just to give enough time for that to settle itself and separate yourself from any foreseeable financial mismanagement. And that's kind of what it comes down to is your loan officer, even though it's a little scary, sometimes it's like going into a doctor's office, and nobody's comfortable with taking off their clothes in front of a stranger. But when you talk to a loan officer, often it's a similar experience. They're going to know your finances. They're going to know what's going on your bank statement. And really, it's not like we care. We don't really care where you shop. However, we have to know, just because we're really looking out for you and your best interests, to make sure that you're not going to run into any turbulence moving forward and getting into a loan. So I want to say that even though first applying for a loan can be an uncomfortable experience, especially for folks that are unsure of their finances or credit history, please know that that's very normal. And that anytime you talk to a loan officer, it is confidential. So we are not allowed to share it with any family members or the seller. I mean, that is a relationship that is held very tightly. So I do want to stress that. Oh, looks like we have a question. Okay, I'm going to read this out loud for everybody. I live in Virginia, and there's no Section 184 program here. Do you know the process to initiate the program in the state? Is it a HUD program? Thanks, Sherry. Okay, well, thank you for reaching out, Sherry. I have pushed on this before. I have attempted to help in this. So the most straightforward answer is ultimately it's up to HUD, and it's up to the counties in the state as to how they pursue and come on board with the program. What I would suggest is to reach out, because there are HUD representatives, and so you just go to HUD.gov, and I can help you with that as well. But HUD.gov, you will find representatives there, regional representatives that can help both with getting counties and states online to this program, seeing the need there, and help with tribes. So your challenge here with living in Virginia is not uncommon, nor is it uncommon that your tribe is having challenges with it too. And I've run into both scenarios. So tribal members that live on their tribe's reservation or tribal land, and the tribe is not allowing for HUD 184. And so it's just a conversation between the tribe and HUD. And as a loan officer, I can help that, but ultimately it's out of my hands. I hope that helps. I know that's not it's not an answer that I wish I could. I wish I could have a better answer, but that's ultimately it's up to HUD. But I do recommend reaching out to HUD. So thank you, Sherry. Okay, looks like we have another one from James. Regarding earnest money, do you have to have your earnest money up front, or can you wait for to proceed from the sale of your current home? Also, is refinancing an option? Oh, I'm glad you brought up refinancing. Thank you, James. So let me answer your first question. Can you wait for earnest money? Earnest money is not required by HUD 184. So let me define what earnest money is. It's what we call the skin in the game, right? So the seller will require earnest money. Often it's, in Oklahoma, it tends to be $500. In states like California and Colorado, it's a percentage like 1% or 3%. Do you have to have earnest money up front? No. Can you wait? Yes. I mean, ultimately, it's up to the seller. Now, if you're referring to the down payment, so with the HUD 184 program, you have to have a down payment, and your earnest money will always count towards down payment if you do have it. Your down payment, as well as any funds, are going to be due at closing. So your second question, is refinancing option available? Thank you for asking that. Absolutely it is, and I haven't even really touched on the different vehicles for 184. Purchasing, building, loan consolidation, refinancing that includes cash out, and term refinance where you're just getting a lower mortgage payment. Those are all absolute great ways to utilize the program. It's not uncommon that somebody is in an FHA loan and they're paying a high mortgage insurance. So throwing out a few numbers here, if you're in a FHA loan, you're paying 0.85% of PMI on the loan amount. So let's say it's $150 for FHA, and that's never going to go away. Usually FHA is going to be stuck with mortgage insurance for the life of the loan. So if I get a client like that and they need to refinance, we're going to put them into a HUD 184 program where we can either reduce their mortgage insurance to a factor of 0.25. So again, that would be roughly $100 in that scenario of a lower payment. Or if you have 20% equity in your home, going back to equity, we can remove that PMI altogether. So you can save, it could be hundreds of dollars, especially in places like Colorado, Oregon, California, those high cost areas. HUD 184 program is, funny enough, it's actually less used in those programs, but the impact is actually more in those places. And it's simply because when you have a large loan amount of $400,000 or more, you're just really paying a big high dollar amount for mortgage insurance. And you don't have to do that with the HUD 184 program. So highly encourage, if you are living in an area with high cost, please look into HUD 184. So that's refinancing. And we didn't go into building, although I will, I'm going to put some videos up that has to do exactly with building. It's a little bit different of a beast. It's a little more expensive of a route, but it's also becoming one of the more popular ways to use it. In the last 2 or 3 years, we've seen construction loans with HUD 184, and that can be small construction rehab. That can be build with smaller rehab, and it could be a full-blown, newly built brick and mortar home or manufactured home. We're seeing that more and more popular, and to take on that side of the HUD 184 program, we've added a staff to just do construction. So we have one person that does all construction, and we have on the back end people that work directly with the contractor. So it's a little bit more of a process. It's a little more expensive because you're paying for site work, but it looks like we have another question. Okay. So no one here in Colorado knows about 184. We can't find a lender. Well, guess what? I'm a lender and I'm in Colorado. So now you know one, and I'd be happy to help. How does 184 compare to FHA loans? So FHA loans are more expensive. So if you are qualified for an FHA loan, congratulations. And you are probably going to be qualified for the HUD 184 loan, and I'm going to save you a lot of money. On average, $50 to $150 less on a monthly basis. So, a mortgage is 30 years, 360 payments. So $100, $150 times 360, it is a big deal. And realtors aren't asking, and loan officers aren't asking. I touched on that earlier. So if you're a loan officer and you're not bringing up these programs like FHA, or VA loans and HUD 184 loans, just because they're different, doesn't mean that they are any more scarier. And I hope that, and I want to make this a take home for everybody listening, is don't wait for your loan officer or your realtor to ask you if you are Native American or a veteran. Let them know, I am Native American. I have a tribal ID. This program is out there, and it benefits me. So please utilize it. It is not a low income program. It is not a program to help people that are down and out, that live on their tribal land, that are seeking assistance. It's not an assistance program. It's a program that arguably maybe generated from a need. That's absolutely true. However, please utilize your tribal ID, especially those folks that don't live on their tribe. I grew up as an at-large Cherokee, and I'm very proud of that. And I was told time and time again, for college, for housing, for medical, for dental, you can't get assistance from your tribe. And it's unfortunate, because I didn't feel any less Cherokee. And so this program is a way to utilize that and to feel like you're you're part of your tribe, and you're putting it back. So I think it's very cool. Again, my direct number is 918-388-9713. I also want to thank a few people that have helped push this forward, and I'll definitely answer any other questions that we have if any more come in. I haven't seen any more come in just yet. But first of all, I want to thank Cherokee Nation PINS Foundation and the Star University for sponsoring tonight's webinar. What a honor and privilege to be able to speak and share this information as a Cherokee citizen and somebody that does this every day and gets to see the benefits. It's just a very cool opportunity that I'm able to take advantage of. I also want to note and thank actually a few folks, our tribal counselors, Mary Baker Shaw and Counselor Buell England. Thank you for helping push this program and the presentation this evening. Also, our previous tribal counselors, Julie Coates, thank you very much, as well as tribal counselor Kara Cowan Watts. Thank you for helping push this. And Kim, thank you, Kim. She's looking at me. As well as our Cherokee groups, TCCO, Tulsa Cherokee Community, as well as Jalagi Los Angeles. Thank you for help sponsoring and promoting the program. So thank you everybody for tuning in. I don't see that we have any more questions. So with that, I'm going to leave you with thank you for spending the time to educate yourself, to take that step again as a investment to yourself, to your family, to your tribe. My name again is Brandon Caruso with Today Lending. I am a loan officer as the president of the Tulsa Cherokee Community Organization, as well as the American Indian Chamber of Commerce here in Tulsa, and also with the Indian Healthcare Clinic here in Tulsa. So a lot of folks to thank, and 918-388-9713 is my direct number. We will post this on YouTube as well as follow up with some more short videos on more programs and benefits to using the program. So with that, it's 8:03. Thanks everybody for tuning in. Have a great night, and we look forward to seeing you next time.